The Chairman of State Bank of India, Mr. Dinesh Khara, is fresh out of a results announcement after the bank reported about a 41% increase in its net profit and, of course, a significant improvement on the asset quality front. Mr. Khara, firstly, on the profitability side, what all do you think is largely driving this?
The multiple factors which are really helping us. One, of course, is the quality of assets are much better, which actually leads us to a situation where we are not required to provide for those impaired assets. And second, of course, the aging provisions are not there now. So I think that way the balance sheet is quite clean. And with this kind of a clean balance sheet, it is helping us in generating much better profit.
Okay. You mentioned earlier that because of the 30,000 crore restructured portfolio, you have provided in excess of what the regulatory requirement was, and that the book is actually performing quite well. At what point do you think those provisions can be written back?
See, we are actually waiting for how this particular book performs. And as mentioned during the interaction also, out of this 30,000 crore book, almost about 12,000 crore is actually coming from retail. And retail, the kind of behavior which we are seeing is much better than what we would have expected. Many of the people have started repaying even before it was actually due for the repayment. So I think much of it is a function of the cash flow. When the cash flows are getting improved for the borrowers, they have started repaying. Threat can perhaps come from the SME sector, but I think for SME sector, the kind of book which is left out, we have already provided almost about 7,900 crore, and I think that should be good enough for us to take care of any potential risk which might come from this particular book.
Okay. Coming to a slightly more broader question, with respect to where SBI's, not just SBI, the whole banking system is standing at this point in time, we have just come out of the decadal low interest rate scenario. The regulators talking about sucking out some of the liquidity with the higher CRR rate. There's also the inflation threat that is still rising. How does growth look like to you for the next year, 2 years?
What I expect is the kind of things which I have seen till now in the current financial year too. The way our loan book is growing as compared to the deposit book, there seems to be a very clear trend that the kind of trajectory which we have seen as on 31st of March, which was essentially an outcome of the third and the fourth quarter, I expect that to continue going forward also. Why I'm saying that is because as of now, the capacity utilization has improved to somewhere around 72%. But there's enough headroom which is available, and the demand still is available in the economy. And I think these are the factors which will help in generating demand, and also which will lead to much better outcome for the economy. Yes, of course, when it comes to headwinds, they are certainly there. When it comes to the crude price inflation, when it comes to the edible oil inflation and the overall inflation trajectory. But I think if at all the geopolitical concerns are addressed, perhaps this may not be as much of a headwind. So I think overall I expect that maybe at some point of time, once this kind of a price increase is addressed, economy per se is on a track which should actually ensure decent growth. Infrastructure spending and infrastructure-led growth is certainly going to happen in this economy. It's very well articulated even in the central government budget also. So I think there is enough traction than performance PLI scheme. So industrial output is bound to grow. When all these things will happen, naturally there will be enough space for the credit to really grow.
Okay. Because you mentioned infrastructure, you had earlier said that you have proposals coming in from the airports, ports, road segments, and all of these. Are these all still being driven by government spending?
No,
is
not
private
necessarily.
spending coming in?
Some of the private spending is also coming up, and also part of the demand is going to come from the unavailed working capital, which is essentially a function of the capacity utilization in the economy. If the capacity utilization improves, that unavailed working capital will also be improved. And incidentally, in case of term loans, we are having a situation where only about 19% of the undisbursed term loans are there.
Okay.
So which very clearly means if I compare it, the position as compared to last quarter, it has certainly improved. The availment has certainly improved. That itself is a reflection of the kind of confidence which people have in the economy, and that's why they have started availing the term loans also.
Okay, last couple of questions. I just wanted to get a sense from you as far as SBI's next leg of growth is concerned. Where do you think that is going to come from? Because obviously corporate is picking up, but it's not like retail you've given up.
So I expect that apart from corporate, even SME should also come, and also retail will continue to grow as it has been doing in the past. So I think all three engines should fire. Apart from our international, which came up in the last year, we expect that we should be in a position to maintain that kind of a growth.
You're also making some developments on the tech side with this, with YONO, of course, and then there's an operational subsidiary that you mentioned. If you just tell us a little bit quickly.
Yeah, as far as YONO 2.0 is concerned, this is an improvement upon YONO 1.0 as our registration in YONO is somewhere around 4.83 crore already, and we are seeing a good traction in terms of accounts getting opened. Almost 27,000 accounts per day are getting opened on YONO itself, and about 63% of the assets are getting sold through the YONO.
Okay.
So that way, it is actually it is helping us in offering a frictionless service to the customer. So I think that way we feel that it is a huge value. As of now, it is available only for our ETB, which is existing to various customers. But going forward, we would like to make it available to the NTB also, and we would like to really capture their variances also. So that is something which is the reason why we are embarking upon this journey, and it's already work in process. The other one is a operational support subsidiary, for which we got 10 principal approval from RBI, and we are really working out to see that it should be the feet on street and across the country, which will help us in sparing our manpower in the branches for doing more productive work. So eventually it will help us in generating more revenue from the branches and also reducing the cost also. So which will eventually impact our cost to income ratio.
Got that. Fair enough, sir. Thank you so much for joining us on this conversation.
Thank you very much.
And thank you so much for watching.